You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster, Joe Benazzi from OptionPit.com, and Henry the FLOWMASTer SCHWARTZ from CBOE. The Option Block is brought to you by CBOE. CBOE's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back and ready to rock here for the Thursday edition of everyone's favorite bi-weekly options extravaganza, known around the globe as the Option Block. My name, of course, Mark Longo from the THE OptionsInsider.com, as well as from the network upon which so many of you are just having a blast these days. If you're one of those folks having a blast, like it, share it, rate it, review it. All that stuff does help keep the people discovering the endless flow of content that we're putting out to you out there. And you know what? If that flow isn't enough for you, you want more in your life. Maybe you want to join us for our awesome pro Q&A like the one we had yesterday. You want to join us after Vol Views. You don't want the party to end for Vol Views. You want to join us after that for Options Oddities. Head on over to theoptionsinsider.com/pro. I see a lot of people asking on Twitter today how they can get access to Vol Views live. Well, easy. theoptionsinsider.com/pro. When you're there, you get access to everything that we do live, including all those exclusive shows I was just talking about. You get the exclusive pro podcast feed. You get your name in the hat to win awesome pro trading crates like the one we just gave out last week on Vol Views, and a whole bunch of other fun stuff. You get previews, you get exclusives, you get that panel I did back in January with the FlowMaster, a bunch of other great folks. That sit down I did with Kathy Clay from CBOE. You guys got that early. You got everything early over there. It's just an embarrassment of riches. theoptionsinsider.com/pro, the place to go to embarrass yourself with said riches. Let's go around the horn and see if anyone embarrassing is joining us on the show today. First, let's go out. He is the king of embarrassment. He is the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Mr. Uncle Mike, welcome back to the show. I hope you're not embarrassed to join us today.
What would I be embarrassed about? I am a co-host for over 10 years, over 1,200 episodes of the greatest podcast in all of option trading. I got nothing to be embarrassed about. I am proud.
That is true. That is quite the credentialed run, sir. You should be proud of that. That is an epic go. Back from your early days as you were Auntie Mike, I believe, back in the... Well, you were always Uncle Mike. Then we had Auntie Mike.
I was always Uncle Mike.
Then we had,
you made Kavanaugh Auntie.
Yes. Then wasn't he Federal Holiday?
Which was darn funny back at the office, I gotta say.
Well, I'm glad we could help there on the early editions. Go check those out if you're intrigued sometime, listeners. Go back a decade plus and check out the early incarnations of the show. Intriguing stuff, to say the least. And you know what else is intriguing? It's the Southern Volatility Mecca known as Austin, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com, who we just established before the start of the show, no longer leaves Austin for any other industry-type functions like OIC or FIA. He says, pshaw to all of that. You're coming to Austin or you don't get the meatballs. Is that correct, sir?
100%. It's correct. 100% of the time. I am a homebody now. That's not true, but I'm not going to OIC. Where is that, in Miami?
It's in Asheville this year.
Yeah, hard pass on Asheville. Not that it's not a beautiful city, but I don't need spa treatments, which is what Asheville is famous for.
Yeah, they got the Biltmore. They're a lot of fun stuff. Not exactly the easiest place to get to, which maybe if you're planning a large conference from a logistics perspective is something to consider. But I digress. Once you get there, kind of a nice place. And maybe, who knows, if the options gods smile upon us, maybe I will be joined by this next person at said OIC conference coming up, I believe, at the end of this month or early next month. Of course, I'm talking about our old buddy, the FLOWMASTER, Mr. Henry Schwartz from actually not from CBOE today, from CBOE proper. Beaming in from right down the street, which somehow our wires got crossed. We were supposed to record live together. That's what happens when we're too busy, gents. Mr. FLOWMASTER, welcome back to the show, sir. How go things in CBOE proper?
The mothership is doing well. I'm having a good week running around Chicago. I just ran past your studios between one meeting and the next meeting, but I made it on time, and I'm happy to be with you. And market's active, so there's lots for us to talk about today.
That explains why those eggs came crashing into our studio window shortly a little while ago. Okay, right before the showtime. Now I get it. It was the FLOWMASTER just saying hello, as it is time for us to say hello to the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, let's do it. Let's commence operations here. Let's see what's trading, what's lighting up our tapes out there. And as the FLOWMASTER alluded to, a little bit of a mixed bag here, coming on the heels of some inflation data this week. You know, last week on Vol Views, we were kind of lamenting, all of us collectively, like, what the hell is up with this market? It seemed like everyone was just prepared for the 3 rate cuts. We were always kind of skeptical of that here on the network. At least I was. And we had the data on Friday coming in hot on the job side. Seemed like that was kind of the nail in the coffin for the 3 rate cuts. And yet the market rallied hard off that news. Kind of a bit of a weird one. Coming into this week now, we had the much anticipated inflation number. That also coming in a little bit hotter than expected. And that seemed like that was the final nail in the coffin for the rate cuts. Market sold off. FedWatch got annihilated. It went from about a almost 60% probability, I think 56% probability of a 25 basis point cut in June down to about 16%. So it kind of fell off a cliff there. So it seems like that was the data that really cemented some folks. Okay, we're not maybe going to get the 3 we were talking about, certainly not in June. And then, of course, we had PPI today coming in a little bit hot as well. So all of that a long way around to saying markets were kind of turbulent, topsy-turvy, kind of red earlier this week. And today, kind of a bit of a mixed bag. Things were looking a little bit more mixed earlier in the session. We were kind of selling off down to about 5140 or so in the S&P. That has since changed. It seems like the bulls have now gotten the bit in their teeth. They're saying, you know what? We're tired of this red on the screen. Because the S&P now up about 0.5%, trading right around 5185 or so. And the Dow flirting with unched. The NASDAQ up about 1%. And what's our old friend? Small caps up almost 0.75%. So again, I suppose if we wait 5 minutes, we will no longer have a mixed market. It'll probably be all green on the screen out there. All that a long way around to saying most of our vol friends are hanging out pretty close to where they were this time last show with one notable exception. We'll get to that in a second. VIX is at about a 1580, 1575 when we kicked off the show. Puts it up not even half a point, about 0.4 of a point from the Monday show. VVIX 92, so looking a little bit frothier there, up about 5 points. VXX 1410, up about a third of a point. UVXY, this number is going to leap off the page to you, 35. What the hell's going on out there? I guess we'll get to that in a little bit. But yeah, spoiler alert, reverse split, listeners, if you're mystified by that number. So no longer sub 10. And then SVIX 39, down about a point. And our old friend UVIX, everyone's waiting now for that one to do the reverse split dance. At a 10 even when we kicked off the show, up about 0.3 of a point. All right, a long way to go. Let's go around the horn, the opposite of the way we started. Let's go out to the land of SIBO proper. Mr. Flowmaster, you mentioned kind of an interesting, a topsy-turvy, some might say a tumultuous week. What was catching your eye out there this week, sir?
It definitely has been a little tumultuous. People there, we saw some fear for the first time in a while, right? We've been talking for a long time about how it feels a little bit like there's complacency. We're at all-time highs. There's, volatility is muted. The put-call skew is very flat, which basically shows you that people seem to be focused more on call buying than put buying. And then, last week, there were some fireworks. So, the truth is, and this has kind of been the lament of a lot of the traders that I've been talking to lately is we do get these vol spikes. They don't seem to be as big as they used to be, and they sure seem to pass quickly. When we had that, that sell off from the high on the 4th, we were up 1%, and we finished down 1%. Things were getting interesting. But in a way, VIX is back, closer to 15 than 16. It was still a little elevated considering, where it's been. But, focus is kind of, I don't know, it really feels like people got a little worried and it's going to be business as usual. And volume is actually, the option volume, it hasn't spiked to what I kind of like to see when people are really engaged. So, today we're going to be back around 40 million contracts, maybe 42. Again, it's kind of, it's a good opportunity for stock pickers. I love a shakeup because that is when opportunity arises. So, it's kind of, everybody got spooked and it seems like everybody's going back to usual.
What you just said, what you just laid out there, Mr. Flowmaster, has pretty much been the thesis statement for vol views for the better part of the last year. We don't get any real good vol spikes. When we do, they last about 12 minutes. And if God help you if you miss that moment to get rid of your upside, because that's it. You have that very short window, and we saw that play out again this week. It is challenging for all the folks out there. In fact, we just did that question of the week a few weeks ago, and nearly half of you said you were most excited about trading vol for the rest of the year. I have to assume a lot of that come into the upside. If that's the case, then I hope you're glued to your screens, or like we said in the past, maybe you're working your orders ahead of time so you can get out. Kind of hard to trade that stuff if you have a vibrant day job that calls you away from your screens on a regular basis. That's the kind of trade you almost have to babysit these days, because unless you thread that needle, it's going to be very challenging to monetize that upside. But you know that. You've heard us say that many times on Vol Views now. Glad to see the Flowmaster getting lured to the dark side as well. The Meatball, he lives in the dark side. Mr. Meatball, sir, what's catching your eye out there today, sir?
Yeah, I think the question you have to ask yourself is how much of the rally was due to the belief in all these advances around AI, and how much of it is the hopium of rate cuts? Now, if you're saying most of the rally is AI based, then this rate cut business doesn't make that big of a difference. If you're in the rates matter camp, then then you're looking at the market and wondering, why aren't we selling off more? Because this is all BS right now. We're definitely in kind of a more perilous area to potentially make a run at the 50-day moving average than we've been basically all year. This is the first time the market feels a little bit tripped up, and vol is still in the 15s. We've not seen it really dissipate yet, but so far, we've not seen that selling fully materialize outside of the 4th and I guess on Wednesday with the CPI news, when we did touch a lower low from the fourth, but managed to rally back. I'm going to be interested to see how much they're able to rally the market today. Can we get back over the 21-day moving average? We've not actually closed below the 21-day moving average for 2 days in a row since January 4th. And I don't know if we're gonna be able to do it, but that is what I'm watching. 51.98 is your level, folks.
You know, that you're right. That is the other tent pole of the market these days is, of course, AI. That's really predicated on two things, of course, the Fed and AI. And if you're all in, if you're drinking the AI Kool-Aid, then yeah, I can maybe see an argument for looking past all this rate cut nonsense. But for a lot of people out there, the rates are the driving factor. And kind of hard, again, I've been saying this for a while. It seems like the market finally catching up. Kind of hard to make the argument that we need the rate cuts when everything's screaming white hot right now. The market, the labor market, inflation. Not exactly an environment that's conducive to rate cuts out there. But I digress. We could debate the Fed forever. Instead, let's go on out to the paradise on earth where they debate nothing because they're happy all the time. Of course, talking about St. Charles. Mr. Uncle Mike, sir, what's catching your eye out there in a distinctly not Uncle Mike kind of week, but maybe turning that way today, sir?
The worm might be turning. We'll see. So rates are rates and AI are the big thing, but I think rates are the big thing for right now, honestly. And looking at it, silver was above 26 for a little bit yesterday, I believe it was, referring to SLV, of course. And so just the fact that we have such a bull market these days in both silver and gold and the shiny stuff, that tells me that there is some fear of more inflation that we have coming. What was interesting is that we didn't, in times, growing up, what we're taught in business school is that if inflation comes, then gold is a great hedge for inflation. And that just is something that at least was taught to me, or at least has been said throughout the years, that if you're worried about inflation, buy gold. It'll keep up with inflation or whatever. And so to some extent that's true, but I think just with the modern market with which we have, it's not as easy and as correlated as it was back when those things were taught back in the days. So we are getting that now, and it'll be interesting to see if we can make some new highs in silver. We still have another $1 to go, roughly, if we want to make I believe it's a 5-year high in silver. So it'll be interesting to see if we can continue to do that. Bonds have been getting the tar beat out of them the last few days, rightfully so. If we're not going to have these rate cuts that are promised, then why do you want to be in bonds? One thing that I really do love about the beauty of option trading in times like this is for a lot of my higher net worth clients, we have a lot of very short-term bond exposure, which is paying the highest rate right now. We have the inverted yield curve. And so for our bond exposure, we've been going very short-term. Of course, the disadvantage of that is that when you go short-term, if all of a sudden we do cut rates, then we're not going to get to be a part of it, or we're locked in at just a shorter term. But the beauty of option trading, you can buy calls on the longer terms for not a lot of money right now. And that's kind of the way of having my cake and eating it too. It's kind of like an inverse hedge. So inverse hedging in an inverse yield curve environment, if you will. So that's what's catching my eye today. We've sold off on the S&P, and we'll see if we can get it back. But it feels like this rotten, awful bear market. We just have a couple of down days. So we'll see where we go.
Let's see where we're going in the broad options market today. Let's fire up the old trade alert machine, shall we, and see what kind of numbers it spits back at us. And you know what? It's spitting some fire out there right now in VIX, including something must have just gone up as TOSAW was talking. He inspired some VIX action because it jumped from about 580,000 up to 650,000 just in the last few minutes. Looks like the big dog right now, nearly 70,000 of the May 13 half puts going up today. Those going up for prices around 17 to 19. Maybe looks like a few went up for 23 cents. So somewhere in that range, 17 to 23 cents there, listeners. You like those? We've been talking about downside puts for a while. It looks like these are opening, including a big block of 40,000 for 18 cents. So you like those for 18 cents? We just did that poll last week on the other puts for 19 cents, I believe it was. I have to do another flash poll this week. But yeah, maybe those are just driving it. Either way, VIX on fire today. 652,000 contracts on the tape. That's against an ADV, which is also on fire out there right now. 796,000 contracts. So we said it before, VIX tends to like a little bit of whipsaw-y action out there in the market. So it's kind of like in this worm turning motion out there today. Will the rest of the market follow suit? Well, I guess we have to find out. Let's go out to SPY. SPY has also been known to like itself a little bit of whipsaw action. And spoiler alert, it is following suit today as well. Usually this time of the show, we see it 4.1, maybe up to 4.3, maybe a banger day, 4.5 million, 5.2 million contracts on the tape already for SPY. So SPY also liking today's little bit of whipsaw action out there. The ADV also looking robust out there, 7.4 million contracts. The S also looking pretty robust, 1.75 million contracts. That's on the upper band of what we tend to expect this time of day now. The ADV a little over 3, about 3.04 million. Small caps, again, looking pretty hot, 786,000 contracts on the tape. That's against an ADV of about 1.16 million, so it seems like they're going to get there today. And the Qs, one of the lone ones that's, maybe except for the S as well, kind of hanging out right around the level we expect them to be right now, which is right around 2.2 million. The ADV, almost 3.6 million. So will they get there the rest of the day? I guess we'll have to find out. Let's fast forward now, listeners, though, into the single names. Is this hot, exciting, pearl clutching action? Is this carrying over into the single names out there as well, listeners? And the answer is no. Put it succinctly, the answer is no. We start off at number 10, listeners. Only cost us 161,000 contracts to get to that spot. So single names, not exactly on fire. Now, it's a little bit of a difference between the bottom half and the top half of our most active. So we'll get there in a second. But the bottom half, not exactly lighting the world on fire, including our number 10 victim here. This is NKLA. Man, falling out of bed today, 77 cents, off 21 cents, or about 21%. More sellers than buyers out there. I'm not sure what is driving it out there today. People are talking about how it needs a reverse split to keep this thing going. That's usually not a sign for long-term health. But either way, NKLA, only 161,000 contract. And you could argue, of course, 77 cents. I'm sure if our buddy the Viceroy was here, he would say that is an option at that point. It's a non-expiring call option for 77 cents. A lifetime call option, if you will. So, yeah, it's up to you. Let's look really quickly. Let's see. I'm guessing it's probably the ones because not a lot of strikes at this price level here. The one puts going up 14 cents, 42,000 times. Looks like also the one calls going up. 1.5 calls, going up at the exact same time. So it looks like we got a bit of a could almost be a strangle, but for a penny. I mean, you got to be buying those for it. You're not buying those for a penny. You're probably selling those for a penny. I don't know what you're doing with the 1.5 calls at all at this point. But I guess they liked them to the tune of 42,000 times for a penny. You do anything 42,000 times, listen, it's going to add up. So 1.5 calls and the one puts for 14 cents. If you sold those, you take a penny off of it, so 13 cents either way. Kind of a weird one, but interesting. So that's why NKLA making it into the top 10 today, falling out of bed. You like that better than just doing the perpetual call option? I'll leave that up to you, listeners. Number 9, it's Micron. They've been rallying a bit of late, doing that again today. 125.60, up about 340 today, nearly 3%. Good for 164,000 contracts. And the number 9 spot, number 8. We're going out to an M name, another M name, I should say, but really probably not the one you're thinking of. Not Microsoft, but Meta. 520 and about a third, up about half a buck. So kind of a quiet net day today. Good for number 8, 190,000 contracts out there. Number 7, the name that used to indicate a sleepy day. Today, it's kind of a stalwart of our top 10. It's Alphabet Class A, 217,000 contracts for them. 158 and 3/4, up about 260 out there today, listeners, and good for the number 7 spot. Number 6, keeping it in the, shall we say, distressed EV world. This is Rivian, also taking it on the chin today. 967, off 60 cents, or nearly 6% on the day today. So this one also taking a drubbing. Good for number 6 today, 219,000 contracts. Just look really quickly, listeners. Fire up the FlowMaster machine and see what they're up to out there. It looks like it's the April 10s. So kind of the at-the-money call. It's not the out-of-the-money now. Going up 19,000 times opening. Those go away tomorrow. So let's hope for their sake they are blasting away at a whole metric ton. Looks like they bought a bunch for 8 cents and 11 cents. So don't know if those are going to work out. You like those, listeners? I'm not overly enthused, but hey, you want to catch a falling knife with 1 day to go? Have at it. Be my guest. Number 5, Amazon, 386,000 contracts, 189.16, up about 3 1/4 out there. Number 4 spot, keeping it in the A tech names, is AMD, 426,000 contracts on the tape. Man, we're already at number 4, only 400K. That's kind of like business. 170 1/4, up 310 today. So some of our A tech names are looking pretty good. Let's see if we can keep the train going. Keeping it in the A tech names. Number 3, it's Apple, 644,000 contracts. That's actually decent paper for them. I haven't seen them at that level in a while. Apple also popping hard today, 172.10, up 430 today. So breaking out of the 160 odd handle that has been hanging out at for a little bit now, getting back to a 170 level, probably causing a little bit of a sigh of relief for all the Apple bulls out there. Number 2, it's NVIDIA. Now we jump up a bit. Now we go to 1.2 million. NVIDIA up 28 handles, 898 today, or 3 1/4%. So looking pretty robust today. A long way from their 52-week low of 262. Oh, you can only just laugh when you hear numbers like that, listeners. And the number 1, the big dog, it's Tesla, 1.45 million, 174.10, up about 230, about 1 1/3% today. So Tesla not feeling the pain of the other EV makers today, kind of rallying out there a little bit today. But it's a day that ends in Y. You know it's going to be rocking and rolling. You know what else is going to be rocking and rolling soon? It's earnings season, popping off hard tomorrow, listeners. All the financials coming in hot and heavy tomorrow. Wells Fargo, BlackRock, Citi, State Street, you name it. JP Morgan, all kinds of stuff out there. So a lot of hot stuff popping off tomorrow. Kind of the unofficial kickoff to earnings season. So if you missed all of our hot earnings data, first off, we haven't left you in a lurch. We keep crunching it even in between these cycles. But now we're kicking it off again in earnest. We've got some hot earnings move results reports for names popping off today before the bell, like CarMax, trading 79.30 going into their announcement. They were pricing in nearly 8%. They delivered over 11%, so outperformance once again. The keys to the kingdom out there. We also had popping off before the bell today, listeners, Stars, and everyone's favorite Lovesac. A hot one. That one's selling off nearly 11%. So apparently not a lot of money in the land of love. Tomorrow, of course, we talked about these on the show on Monday. All the financials pricing in a heck of a lot more juice. Morgan, 195.5 is where they were trading when we ran this report. Again, hot off the presses for you folks right before showtime. 550 is where they've moved in the past. They're pricing in nearly $7. $1.80 is what Citi is pricing in. What they've moved in the past. They're pricing in $2.30. Bank of America has moved 90 cents. They're pricing in $1.36. I mean, it just goes on. Wells Fargo, 206. They're probably the lightest of the bunch. They're pricing in $2.12 right now. PNC, they've moved $3.30 in the past. They're pricing in $5.55 right now. So right now, the market is pricing in a whole heck of a lot of juice in the financials. Is that merited? I guess we shall find out starting tomorrow, listeners. You want all this data for yourselves in your hot little hands, completely for free because we like you folks and have done so for years. Head on over to the website, theoptionsinsider.com. Click on the Options News and Articles tab to begin your journey. Right now, the season starting off hot, listeners, with a whopping 4 names reporting. We're already at 100%, 108%, I should say. So looking hot. That's right along the lines of our long-term average of 109%. Will we stay there? Well, I guess if these numbers are to be believed coming out of the financials, looks like they're pricing in yet another banger season. Is it time for another banger session of the Odd Block? Well, let's find out.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's get weird. Let's get wild. Let's unleash the eye of the FLOWMASTER. And one of the cool things we get by having the FLOWMASTER on the show, on top of all this data, is he likes to peer behind the curtain into some of the more, shall we say, opaque aspects of the options market, like the flex market, for example. I was just talking earlier about our old friend NKLA, which is now trading right around 75 cents. So you could argue that is a long-term call in perpetuity for 75 cents, roughly. But also a ton of options flow going up out there, as we just discussed earlier. Mr. FLOWMASTER, sounds like in your little bit of a glimpse behind the flex curtain, you saw some intriguing activity going up there as well, sir. What caught your eye?
So flex options are, a kind of a cool little niche within our listed option world. And I've put a good amount of work into really keeping an eye on, because they're half the people probably don't know these things exist. You can trade an option with whatever expiration and whatever strike you want via flex. And you can even do American style or European style expiration. And there's a few other cool tricks too. And in NKLA, I have watched this stock have its issues, and there are 565,000 puts open in the flex open interest for NKLA itself. And that compares to the listed open interest is only 436,000 puts. This is why you can't ignore flex. Flex trades are a little bit harder to see, but this is one of the slides I'm going to show at OIC. The flex volume is pushing 1% of the average daily listed volume now. So, on a 50 million contract day, you'll see 500,000 flexes trade. It's not huge, but it's very consistent. They're used for a bunch of different purposes. And in this case, it's a little trickier to dig back through the flex trade history to see, but I do see 255,000 of the January 2025 one strike puts are open. They were most recently marked at 44 cents. I don't remember when they traded. It's very manual to go digging through, but what this could be is somebody using flexes so that they can turn these large listed positions into calendar spreads for expirations that don't exist. Sometimes we see it for strikes that don't exist. So in a case like this, you have to pay attention to the flex as well, because it's such a big part of the puzzle.
Yeah, that's huge. The flex almost dwarfing the listed open interest. You don't see that too often. I wonder why they're choosing to go that route. I mean, it's not like you can't get the one puts longer term in the listed. I don't know why they're deciding to go that route, but I guess they found the liquidity they needed there. Interesting stuff out there, and also maybe not an overtly bullish sign that it's a boatload of the one puts hanging out there in the flex side. Again, intriguing stuff out there, listeners. As we keep on rolling, let's fast forward to a name we have talked about on the network before, but it's been a little bit. Let's go out to Grupo Financiero Galicia SA, ticker symbol GGAL, GGAL. Trading right now 29 and about a quarter, up about 40 odd cents today. So a decent little day for them. A pretty darn good year though. A year ago, 1165. So they're up 1765 pretty much, or 151% on the year. Argentinian financial services company out there. So we have talked about them before. I'll get to that in a little bit. But first off, Mr. FLOWMASTER, sir, what caught your eye out there and everyone's favorite GGAL, whatever you want to call it?
GGAL. So this is one that it paid off to do a little bit of digging. So what we saw was a decent sized block, 3,500 of the April 28 strike calls, trading for $1.75 this morning. This was tied to a delta hedge of stock at 28.94, which is pretty common in when a trader wants to limit the delta risk. Basically, usually they can get a better price if they tie the trade to an appropriate hedge. So that's the trade. It did trade. Our theoretical value shows 169. So it was definitely a buyer. And so I was about to say, oh, this looks like a bullish piece of flow. It showed up on one of my bullish scans. But then I actually looked at yesterday, and the biggest open interest change as of today, which I can see in Trade Alert, was about 3,500 of these 28 calls being opened. That was today. So then we know to go look at yesterday's flow. And I can see the trade yesterday. They actually sold 3,500 for between $1.55 and $1.60. I think the average price was $1.55. So, and that created the open interest. So now we know today's buyer basically was just closing those down. And they paid $1.75 today. They sold them for $1.55 yesterday. So that actually looks like a loser. Stock was at $28.77 yesterday. So the stock's up more than $1. I don't know why they changed their mind. But as you said, the stock has kind of been on a tear to the upside. I don't know much about the name or the Latin American economic issues. But this just looks like somebody said, I've changed my mind. I don't want this anymore.
We have talked about GGAL before here on the network. Most recently back on February 29th, listener, we talked about what looked like didn't quite line up this way, but we kind of speculated maybe a bit of a funky time collar. Could have been just unrelated paper, but they went up pretty close to each other. First off, we saw a boatload of the April 17 half puts going up for 37 cents. Looks like paper was probably buying those 15,500 times. The stock at the time was 22.68, so you can do that quick math, listeners. Not looking great on those puts. The stock threatening 30 right now, 29 and a third. So they're off over $500,000, about $573,000 on that block. If you go look at the OI, there's actually more open still. It's about 22,000 open in those 17 half puts now. So again, they probably bought those against stock, so they're not too mad because the stock has been on a tear. But still, on the options leg that we could see, not looking great. We also pointed out 5 minutes later, we saw a block of close to half, 7,999 of the July 35s going up for 67 cents. In which case, it could have been a funky, it would have been a great execution to sell those puts for 37 cents when they were pretty much a quarter at 40. That's a great sale at 37 cents if you can get it. That lines up a little better with financing 2-for-1, the 35 calls. They went up about 8,000 times for 67 cents. And spoiler alert, those are looking better. And those are all still open right now as well on the 35s. There's about, there were quite a few open last as I checked here. Where was it? Yeah, about 6,500. So maybe they've taken a couple off since then. But intriguing stuff. So maybe they did finance that out there, in which case that's a better do, as they say. But either way, they're looking really good on the stock component. They're looking really good on the July upside. The puts, if they bought those, obviously, not so much. Mr. Flowmaster, anything else catching your eye out there? Or should I follow up on a couple other trades from this week, sir?
No, nothing else for me.
Let's look really quickly then on what we talked about on the Monday episode, which was just kind of another one of these nonsense trades, listeners. This was brought up by the Rock Lobster. He wanted to just call it to our attention. We have talked about ridiculous upside in NVIDIA in the past. This one might take the cake for just sheer absurdity for a couple of reasons. We talked about a 5,000 lot, 5,164 to start. Then they kept doing 1,000 more. I don't have to see how many the total they did on the day. But either way, it was NVIDIA, listeners. It was the April expiring tomorrow, so the 12th, 1,500 calls. Yes, you heard me correctly. If you missed the show on Monday, that's what we've got going on out there right now. The April 1,500s going up for a whopping penny, listeners, and a lot to say about this. First off, the stock was around 870 or so when these went up, so spoiler alert, they're not looking that great right now, and B, they never were looking that good. Let's look up. There's a total of 6,300 of these bad boys open right now here. So yeah, that's just I think they did a total of 5,100. So those other blocks of I guess that's those blocks all added up to that total of 5,100 then. So still 5,100 is a boatload of these things. Also, what was even more damning about this trade, not just the fact that they're swinging for ridiculous fences, but also they could have gone a lot farther down the strike chain for the same amount of money if they wanted to pay a penny. I think even the 1,200s were offered at that level, certainly around 12 half, 1260. So they could have gotten a much quote unquote better option for the same price if they had just looked. So there's a lot that's wrong about this. Obviously, they're playing some other game entirely. I don't think they're looking for a pop to 1,500, listeners. This could be kind of the garbage play we talked to our buddy Matt about in products like VIX or SPY puts, but doing it in NVIDIA. I've never really seen it done on the weekly basis before. That seems like a lot to ask from these options. But there you go, listeners. Just a whole bunch of weirdness afoot. And speaking of a whole bunch of weirdness, I'm glad I saved a little time, listeners, because we need to get to some of this weirdness right now. It is time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, let's get to it. The mail block. Man, we kicked up a hornet's nest on yesterday's episode of Options Bootcamp, tackling a topic that seemed to me to be on its face pretty straightforward. In fact, we used to laugh about this all the time on the trading floor. Whenever we'd see in, let's say, broad financial media, someone writing about the options market and saying, oh, options are a zero-sum game, and for every trade, for every buyer, there's a seller, and vice versa. So someone wins, someone has to lose. And we'd always laugh at that because, as market makers, it's our job to take the other side and still win, still make money. And obviously, it can be done, and it is done on most of the trades. You think liquidity providers are losing on every trade you do out there? That would be a pretty crappy business model. Obviously, they hedge away the delta risk. They're playing a very different game than the end retail or even a lot of the large institutional customers at the end of the day. So the notion that options are this zero-sum game seemed like kind of a demonstrably false notion. We kind of poo-pooed it on the Options Bootcamp show yesterday, but that led into a whole other discussion. Dan and I surprisingly debating whether stock is a zero-sum game. That seemed like an open and shut thing to me as well. He thought it wasn't. He thought stock wasn't a zero-sum game, but he thought options were. I clearly think stock is. That's pretty easy, I think, Delta One products. And then options, a little bit more room for nuance. But we thought we'd put it out to the masses, you folks, at the end of the day, because after all, you folks are the ultimate arbiters of all this stuff at the end of the day. So we put it out to you 2 questions, a fun flash poll that went live only during our Options Bootcamp show yesterday, asking you folks, are stocks a zero-sum game? And I'm pleased to say most of you agreed with me. It was 100% saying yes, until at the end, I think Dan and some of his cronies got in there right at the last minute, tried to gum up the works. It was still about 70% saying yes. So I'm glad to see saner, cooler heads prevailed out there. The one that's kind of flummoxing me a bit, and I want to put it out to all of you guys here on the show as well, because I want to get your thoughts, is the other one. The actual longer-term question of the week, which we have going right now, which again was driven off that show yesterday, which is very simple. Are options a zero-sum game, yes or no? I will say right now, it is deeply divided. Yes was actually winning it right before showtime. Now we have swung 54.5% for no, 45.5% for yes. This to me is a very surprising result. So I want to go around the horn, get everyone's thoughts. Maybe there's a fun debate to be had here after all. Let's start with the uncleist of Mikes, Mr. Uncle Mike TOSAW, sir. When I say to you this question, when I ask you, are options a zero-sum game, how do you answer and why?
I would say no, they're not. Just from a very simple standpoint that, let's say that I'm a covered call writer and I want to sell my covered call on NVDA. I sell you my covered call, NVIDIA gets called away, I make money, but NVIDIA goes higher than my covered call or my call was worth initially. You make money because you bought the stock from me at a better level. So we both made money on that ultimately. Now, the option itself, you could argue is zero sum. I lost penny for penny what you made on the option itself, but because of the fact that we have other instruments and other things, it makes me feel like it's not a zero-sum game.
Yeah, I mean, we live in the real world, right? In the real world, options have that hedging component to them that you don't really have in Delta One. So by definition, they're really not. I mean, you could both eat from the same pie and both have as much as you want and do well on it, as opposed to stock, where if I cut a bigger piece, you get a smaller piece. And a very different conversation. But who knows? Let's go around the horn. Maybe there's some debate to be had here. Let's go out to the greasiest of meatballs. Mr. Meatball, sir, what do you say when I ask you that question? Are options a zero-sum game, yes or no, and why?
Well, it depends how many steps you want to take to get to zero sum. If you're just looking at, I buy a call option, market maker sells it, and then hedges, yeah, we can both win. But if you think about it, the market maker, when he hedged, had to buy the stock from somebody. And so if the market maker wins on his stock, then the person that sold the stock, they're losing. So if you go a couple of steps, you can get it to zero sum. But on their surface, I would say that the way most people think about it in just the market maker versus customer aspect, they are not. That would be my general take. And I would also say that the time when they're not a zero sum game is when we have cheaters, like somebody with some, let's say, well-timed flow buys options that have a very low delta that end up becoming wildly in the money. The market makers probably didn't get to hedge that position very well and are probably losing big.
I was going to say,
something like
that's
that.
when it is a zero-sum game. I've been run over on those a few times. I didn't get any stock against that.
So so the answer is no, they are not a zero-sum game, with a caveat that, yes, they also are a zero-sum game.
When you get run over by Goldman at 259, buying 100,000 of whatever out of the money calls, and you have no chance to get the stock before the close, and of course they upgrade it right after. That's when it's totally zero sum. I see you there. And I can maybe see your point. It's a bit stretching it, I'll give you. But yeah, the specialist, if you rope him in, the guy who sold you the stock, then yeah, he's losing. Which gets back to my original.
You got to take a few steps, but like I said, at their surface on a normal fair trade, they're not zero sum. But if you take enough steps or you've got a cheater, they become zero sum.
And we can all agree here, right, that Delta One stock is a zero sum game, correct?
Yeah, I would say so.
I don't see how it's not. I had a long argument with Dan to this effect for half an hour yesterday. I still don't see what he was trying to say. But this clearly triggered a lot of our audience. People sent in epic treatises with why. I haven't had a chance to read them. I don't have that time yet. I'll have to devote half an hour after the show to these. But people are clearly triggered on this issue, which is, go figure. It's always interesting what sets off the audience. We did a thing on box spreads like a year ago, and people loved it, and they went crazy, and they had all fired up. On box spreads, the most innocuous of things. And now here we are, something seemingly innocuous as well, the notion, are options or are they not a zero-sum game? Just really, really triggering a lot of people, which is crazy. Mr. FLOWMASTER, as the man who analyzes the flow all day long, you'll get the final word on this. First off, stock, zero sum, yes or no? I think I know which way you're going on that. And then B, the options, where do you fall on that one, sir?
I do believe that stock and futures too are zero sum. There's a buyer, there's a seller. I guess you could kind of get into some sort of argument about opportunity or something like that. But with options, I think Mark and Mike are both correct. It's not a zero sum game. Really, as soon as you really start to think about how does this work, and the reason this market is so successful is that in every trade, basically there are, it's favorable, it's desirable by both sides, right? So, if option buyers were just losing money, then there wouldn't really be any more option buyers. And when you go down a level or two, like Mark said, it becomes very clear, like, oh yeah, you're getting convexity, which means that basically you have the opportunity to capture, P&L through gamma. And that's kind of the piece where, I can buy a call, and you can be the seller, and we can both make money on the trade. And so it can't possibly be zero sum because we both made money on the trade. And that tends to be the level, the equilibrium of these prices is we both want to do that trade for a reason. So definitely not a zero sum game, but I think it's our responsibility to try to educate the world and get people to understand, how could I buy this option for $1? And in the end, it expired worthless, and I held it to expiration. But I didn't lose any money because of the activity that I was, the reason that I bought the call and how I was kind of hedging it over time.
Just scrolling through some of the many epic responses we got. This one guy gets it just for the handle of the week, bleeds. But he agrees with you, Mr. Meatball. After a very epic treatise, he says if you include the hidden guy that sold the deltas to the market maker, then it's not. So that's exactly what you were saying too. So you got to go multiple steps, probably beyond all rationalization to include that. But okay, maybe I could be open to that somewhat crazy caveat. But in the real world, the way options are practically traded and hedged in the real world, they are not a zero-sum game. And I will fight you if you say they are. I'm just kidding. We love all of our listeners, even the ones who vehemently disagree on seemingly innocuous things. We love you all. As long as you're listening, hey, if you're inspired to write in, then by all means, have at it as we go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, well, I go deep into this epic list of responses to the notion of our options, a zero-sum game. Let's go around the horn. Man, you never know. You never know what's going to trigger people, listeners, which, again, makes it fun at the end of it. We love you all out there. Let's go around the horn, see what everyone's keeping an eye on for the rest of the week. We'll start with the Uncleist of Mikes. Mr. Uncle Mike, sir, hopefully I haven't triggered you with this question. And B, what are you keeping an eye on until the Monday episode?
Well, here's what you did trigger me on. Can stocks be a zero-sum game? Yes, they can be if you involve options. So I guess that's kind of what I just thought of as we're going through this. So stocks could be a zero-sum game if options are involved too.
You mean they could not
that makes options zero-sum game, and so we just keep going around the circle with this, I guess.
You know, I did think about that. I was like, what if the specialist is using options to hedge? Then we're getting into all sorts of crazy, mad iterations that really aren't that practical or viable. But I did think about that down the rabbit hole. What if the stock specialist is going the other way and hedging with the options? But that's a conversation for another day, sir. I'm glad to see we have triggered you as well. But what are you keeping an eye on for the rest of the week, sir?
No doubt. Anything inflation at this point, any numbers that we have, I'll be watching with bated breath, seeing if this is just a way to buy the dip or seeing if we're making new highs, and then seeing if silver can make some multi-year highs. Exciting times.
Who knows? Maybe I'll talk precious stuff again on TWIFO coming up in a little bit, listeners. Who will my guest be? I guess you have to tune in to find out. But last week, I'll give you a clue. The title was It's All About the Metals, Baby. So that should give you some clue about what we talked about last week. Mr. Meatball, same question for you, sir. What are you keeping an eye on until the Monday episode?
Bank earnings. Those are going to be, I think, pretty important. I'm also keeping an eye on Apple, which seems to be kind of breaking out. But I think the big thing between now and Monday is those bank earnings. That is going to be the driver. And again, NVIDIA up 3%. So the market is rallying. NVIDIA is the market now, folks, not Apple.
Yes. I've seen many charts over the last month of look how well Apple did or perhaps did not do over the past whatever period, 3 months, 6 months, a year versus NVIDIA. I've seen a lot of that data floating around out there of late. Speaking of data, Mr. FLOWMASTER, what data are you keeping an eye on until your next appearance next week?
Well, I will also be watching earnings. We definitely, the rest of the month we'll start to see some excitement there. I'll be prepping for OIC. And, I'm really going to be kind of watching, I think we're in a little bit in the mid zone for volatility, right? VIX right now is 15.17. We were at 13 for a while. We were at 16 briefly, over 16. I think a lot of people are going to be, everybody's always looking for kind of the sweet spot on volatility, right? Where we're getting some movement. Nobody likes it when VIX is at 10. Nobody likes it when VIX is at 60 either. So, I think trying to figure out we hit some turbulence over the last couple of days, and are things going to really quiet down? Is it going to be kind of business as usual? Is NVIDIA and Apple going to just kind of resume their march higher? Or this macro picture and rates, and we still have some geopolitical stresses going on out there. Might that kind of keep things choppy for a while? I kind of think we're going to be choppy for a while.
All right, that music means we've come to the end of another epic sojourn through the world of all things options. Thank all of you for joining us today here on the show. If you want a little more in your lives, don't worry. We'll be coming back in a little bit. If you're in the live, just hang out there. If you're on the on-demand side, just hit next on your podcast device of choice. By the time you're done listening to this, TWIFO should be ready for you there as well. Thanks to all of you also who really dove in on this zero-sum game debate. It's fun. I'll have to devote some time later today to sitting down and reading all these. It's a lot A lot of very in-depth responses. Again, we appreciate all of you out there who take the time. We love you all, even if you think we're crazy. We love you all out there at the end of the day. How dare we say options are a zero-sum game? Here's 15 pages as to why. We love you all out there. But before we go, let's go around the horn. Let's start with the FLOWMASTER. Mr. FLOWMASTER, sir, if folks want to kick the tires and light the fires on all this cool stuff, maybe even try to peek behind the curtain on a little bit of flex flow, where should they go? What should they do?
Just go to SEBO.com/RMA and you can request a trial, and we'll be happy to show off the Flex Analytics, which is really pretty new. We're still rolling it out in phases. So some cool stuff there. SEBO.com/RMA.
I was going to say, I need to do more of that myself. I need to dive into a little bit more flex flow myself. So I need to start adding that to my workflow, Mr. FLOWMASTER. Especially for a name like that, NKLA. If more OI is in the flex than in the listed, that changes the game a little bit. So check it out, listeners. SEBO.com/RMA. See what other kind of fun and surprising nuggets you can uncover for yourself over there. And the Meatball is always full of fun. Some might say surprising nuggets. Mr. Meatball, if they want to sample said nuggets, where should they go? What should they do?
Yeah, head over to OptionPit.com. I'm putting out content every day, or you can follow me on Twitter at OptionPit.
And he just informed me via the show chat, listeners, that later today he will be having a 1-hour live stream on why options are not a zero-sum game. So everyone can go over there and debate with him at length. Live webinar. Have at the Meatball over there. Optionpit.com is the place to go. And last but not least, if you want to debate with him this clearly very contentious issue, Mr. Uncle Mike, where should they go? What should they do?
I don't debate such things. I'm above all that. The only thing that I debate are things that are important, like professional wrestling. So with that, if you'd like to have an intelligent conversation on professional wrestling or option trading, investing in general, whatever the case may be, check out my website, stcharleswealth.com, or follow me on Twitter at Mike TOSAW, TOSAW.
Pro wrestling, hotter than it's ever been. WrestleMania last weekend, man, they are selling some tickets and some merch and everything else, let me just say. So, I take another look at that TKO stock now in light of all how much they're selling. Sellouts everywhere they go. People can't get enough of the pro wrestling. If you want to talk about pro wrestling and maybe a little bit of options fun, at Mike TOSAW on the old Twitters, TOSAW, or stcharleswealth.com is the place to go. We got to get on out of here. Back again in a little bit to talk maybe some metals. Who knows what's going to make it on the show. So you got to tune in every week. It is called This Week in Futures Options. That will be coming up in a little bit. If you're listening live, just hang out. We'll be back for you on the live stream in a little bit. Remember, if you want to join the live, get access to all this cool stuff. Maybe you want to debate these issues in a lot more detail. We do have all these pro Q&As and every other venue that we can do that on. Check it out for yourselves. TheOptionsInsider.com/pro is the place to go to get access to all that fun. Then back again tomorrow with Vol Views. Who will join us tomorrow? Well, I guess it's already out. The cat's already out of the bag. We have UVXY Trader, a.k.a. Michael Listman, I believe, joining us, which is appropriate timing. UVXY just doing its reverse split, so should be a good time to talk about all that fun out there in the ever-eroding world of vol ETPs. Then coming back again one final time for the week, exclusively for you pro cats and kittens over there with a little bit of options oddities. Then we take a much-earned rest for the weekend before we're back again on Monday. Another episode of The Option Block. Stay safe out there, everybody.
The Option Block is brought to you by CBOE. CBOE's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cbo.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.